Well, good morning, everyone. We're so grateful that you're joining us, and we are very fortunate to have Peg Keogh with us this morning. She is a financial aid expert with College Aid Pro, and she has helped thousands of families navigate this college financial process. And so I just want to start off by thanking her. Thank you, Peg, for being here. Bear Creek is very fortunate to have your expertise this morning as you talk to us about how parents can really navigate this financial aid landscape with colleges. So I don't want to take any more of your time because I know you've got a lot of great things to cover. So thank you for being here, and I'm going to turn it over to you.
Yeah. Well, thanks, Katie. I've spoken at Bear Creek. Can't even remember when the first time was. Way back when everything was live. Everything was in person. So it's been quite a few years. So great school. Thank you, everybody, for being here. Just showing. Oh, God, I thought I lost you guys, but Katie just went off. Just showing up here today is huge because you have such a leg up. You're going to learn how financial aid works and then start to see how you fit as a family. And that's actually more important than understanding financial aid. And financial aid is kind of funky. It's not always intuitive. And so being here today and learning how this whole process works, like I said, you're going to be so far ahead of the game. So as Katie said, I'm Peg Keogh. I'm the Director of Education here at College Aid Pro. And a little bit about me, I come from the financial industry. So I was a financial planner, advisor, and I have twins. I have a boy and a girl. And when they hit high school, I had been in this world of saving for college and all that sort of stuff with my clients, but I kind of did this deep dive into, okay, how does all this work? Applying and all this stuff. And as all of you know, I was just shocked. You've realized it too, how complicated this whole process is. And that's when I kind of had this aha moment and decided, you know what, I'm going to shift here and I'm going to just focus on this, what I call late stage college planning with parents of high school kids who are college bound. And so this is all I do. As Katie said, I've worked with thousands of families, had my own business, and joined College Aid Pro about 3 years ago. They acquired me. And I wanted a team and I wanted to be able to be doing more stuff like this instead of marketing and tech, to be honest. This is what I love. So I'm happy to be here today. A few housekeeping things. I'll do my best at the end to cover questions. I want to respect your time, and we're going to be here an hour, so I'll try and leave about 10 minutes to look in the questions. Please put them in the Q&A as opposed to the chat. It's just one place for me to look when I get to the questions. And this is being recorded. So we will send out, College Aid Pro will send out an email to everybody who registered, because I know not everybody can make it live, and you'll get the recording. So if you get distracted or you want your spouse or your kids or whatever to watch it, you will have that recording. So don't worry about any of that. So with no further ado, let me share my screen here and let's get started. Okay, as I said, I am from College Aid Pro, and this truly is our mission to end the student debt crisis by empowering you to shop smarter for college. And that first step of that is understanding the world, the arena, whatever you want to call it, that you're living in with financial aid. Because the more you understand it and apply that knowledge, the better off you're going to be to look at affordability, to set expectations for your kids. So it's really huge. And I'm saying that as a parent. I did that with my two, and I really didn't have all this stress that I see so many families go through. So hopefully I will be able to accomplish that for you today. So you see our email here, and you can jot that down, support@collegeaidpro.com. Collegeaidpro.com is our website, chock full of free resources. I'll talk about some free software that I encourage you to set up an account later. Okay, so that's me. So let's dig in here. What is financial aid? How does financial aid work? The biggest takeaway is that all these colleges are discounting their sticker price, their cost of attendance, which is tuition and fees, room and board, books, travel, personal expenses. As we all know, this has been going up. This cost of attendance has been going up for decades. We have no control over that, continuing to go up much quicker than the rate of inflation. But it almost, these costs of attendance are really irrelevant because all the schools are discounting, and they do it in different ways. And here's three buckets of how the cost can go down. Far left, you're looking at need-based grants. So as the name kind of hints, you have to have financial need. And we're going to talk about that in a minute. But this can come in the form of from the state of Washington, if you go to a state school, federal grants, but most of it is institutional grants. That means from the colleges, that's endowment money. Free money, don't have to repay it. The middle bucket, also free money, also from the colleges, from their endowment fund, merit-based scholarships. So this is the flip side, not based on your financials, but based on your child, grades, test scores, leadership, talent, whatever it happens to be. Then the third bucket we call self-help. So that's loans and work study. A lot of families have that as part of their college funding strategy. That's okay, but it's a reasonable amount of debt if you're going to go into debt. And work study, your child basically gets a job, gets a paycheck, and you decide as a family how that's going to cover the cost of college. What you want to do is maximize the first two buckets because that's the free stuff. So I'm going to go into some detail about those two buckets right now so that you understand that. But big takeaway here, and I'm going to show you an example. This is actually University of Washington and Gonzaga. And this was an actual student. So you look at that cost of attendance, about 34.5 for the U and about 77,000 for Gonzaga. This family has an SAI, student aid index, that I'll talk about in a minute, of 30,000. But look at what this student was offered at the end of the day. Full price at the U. They got some loans, but I'm not including that in the bottom line because it's not free money. But look at Gonzaga. It went from almost 77,000 down to 40. So that's a really different conversation if this is your family to say 40,000 versus 77. There might be reasons to pay more for Gonzaga, a good program, whatever it happens to be. And this is this happens all the time. Just please keep that in mind when you're looking at the confidence for schools. The first on need-based aid. How do they figure out if you have financial need? Very simple equation. You've got cost of attendance that I've talked about, minus something called a student aid index. The term expected family contribution is the old term for it, but certain colleges are still using it, so I've kept it in the slide. Basically what it is it's what the college excuse me, thinks you can afford for 1 year of school. So it would be 20,000 or it could be 120,000. I've worked with a lot of families that have high SAI. So they take their cost of attendance, subtract the SAI, and that's your need. So of course, if your SAI is 120,000, thank God there are no schools that cost that yet. We're at 100, but we're not at 120. You don't have any need, right? But if school costs 80 and you have an SAI of 50, you now have $30,000 of need. And then you have to figure out how the college or that university meets need. They don't all do it the same way. Many of them don't meet 100% of need. They can't afford it. So, but this is the beginning piece, really simple formula. And this is why you submit financial aid forms to understand your SAI/EFC. Now let's dig in a little bit deeper on how is the SAI calculated. There's two main buckets. There's assets, and it's parent and student or parents, and income for both. So let's hit on assets first. Big takeaway here, pretty much all assets are on the table except for retirement accounts. So 401ks, 403bs, IRAs, pensions, those are all retirement accounts. So as a financial planner, if you've been sucking money away there, kudos to you. That's awesome. Don't put that on the financial aid form. That's one of the biggest mistakes people make when they see that net worth investments. Like, well, my 401k, plop it on there. You don't want to put that. then everything else, if you have vested stock, you have non-retirement portfolios, checking, savings, CDs, all that sort of stuff, that's all on the table. If you have college savings accounts of 529, if it's a parent-owned 529 with your child as the beneficiary, I don't think I've ever seen a 529 where the child is the owner. Whoever the owner is of that 529, it's their asset. So if the parent is the owner, then that goes as a parent asset on the financial aid forms. If grandma or grandpa's the owner, that's their asset. It doesn't go on the form. That can be used to pay for college, but it doesn't go on the form. And on the FAFSA, I'm going to get into the forms in a few minutes, you only put the 529. That is not like the 529s. That's actually a gift to your child if they're the beneficiary. So that is an asset of theirs, but there are strategies to move that into your name. That's something I'd have to help you on a one-on-one basis because you don't want to just nature do it. You want to look at taxes, you want to see if it's even going to help you. There's a lot of pieces there. Okay. If you have a jointly owned account with your child, super common, that can be your asset. And then the last piece on asset is real estate. So any real estate that's not the primary home you live in, it's on the table across the board, the equity in your real estate, which means your market value, which is a planning opportunity. You don't want to overestimate the value of any of your real estate. You want to be honest, but not overestimate. And that's something we help a lot of families with, strategizing minus any liens. So your main mortgage, a HELOC, that's your equity. So for any real estate that's not the home you live in, it's on the table. Most schools in this country don't look at your primary home equity. That means the home you live in. There are a group of colleges that do, and I'm going to talk about that in a few minutes. And I would guess most of your kids have at least one school, if not many more on their list that fall in that bucket and do look at your home. So that's another planning opportunity to think about if you have a lot of home equity. And I know Seattle, we've gone crazy here with our real estate. So a lot of people are sitting on nice equity in their homes. Last piece about assets is when you're doing the forms, and I'm guessing I probably have some class of 2025 parents here. I should have asked at the beginning. I usually do. You are going to be, it's the value of the assets when you're submitting the form. So if you have your portfolio linked up and you can look at closed business and the market's had a bad week, you can put that lower number. It's literally the real-time value of your assets. Now, income is the other piece, and that's the flip side. It's not a current income. It's actually a 2-year look back. And we call that prior year. President Obama put this into place years ago. So you can see on the slide here, the easiest way to remember it is take the year that your child's fall, whatever that, so fall 2025, fall 2026, whenever your child's going to be going to college, subtract 2. That's the year you're going to be reporting on for that financial aid form season. So if you have a senior right now, it's all about 2023. Obviously, that tax year's over. You can't go back and do anything there. If you have a class of 2027 student, you're not in that tax year yet. So you want to make sure that you don't do anything to inflate your income that's avoidable, like capital gains. Sometimes people take distributions out of 401ks for some reason, and there it is sitting on your tax return when you're doing financial aid forms. So you want to try and avoid that if you can. Parental income is by far the biggest driver in that SAI calculation for most families. It's mostly based on adjusted gross income, which is line 11 on your 1040. Student income is assessed at 50%, but most kids don't make that much money, one. And as you see on the slide, For FAFSA only schools that only require the FAFSA, kids can make over $11,000 and it's a wash. So that keeps going up, which is nice, although it gets kind of meaningless because kids don't, it used to be 9,000. Kids didn't usually make that in a year either. But so usually kids' income is not going to be a big driver, but parental income is. And making a nice living as a financial planner, I will tell you, it's a lovely, wonderful thing. It just stings a bit when you're trying to get financial aid. It just is what it is. So those are the two pieces of calculating the SAI. So if you're listening to me and you're like, I don't think I'm going to be eligible for need-based aid, which I'm going to tell you, make sure for sure that's true. Please don't just listen to your neighbor who tells you that. But say you truly aren't eligible, and I'm going to go in a minute and go in and show you a sample family so you can see and practice what I'm talking about. But if you truly aren't eligible, you probably still don't want to pay $95,000 for college, right? Writing a full check, as I say. Remember that second bucket that I showed you? That's another form of discount. So that's the merit scholarships. So let's talk about that for a few minutes, and then I'm going to go in and show you a sample family, and then we'll talk about the financial aid forms after that. So merit aid, very different from need-based aid in a bunch of different ways. One, it's not based on your financials, like I said earlier. Two, and this is lovely for planning because you always want to think about this over 4 years. It's a 4-year expense. Merit aid is almost always guaranteed for all 4 years as long as the student maintains a certain GPA. If you don't see that, you want to read the fine print. If you don't see it, confirm with the school. But sometimes it's blatantly obvious when they accept your child. They might say, congratulations, you got the provost scholarship for $100,000. Well, they're basically telling you, we're already discounting that sticker price by $25,000 a year. We don't even care what you make. We want your child, and we're starting to sweeten the pot, like make your net cost less. Because these colleges, most of them are nonprofits, but they truly are big businesses. They have departments called enrollment management, and what they really care about is net revenue. They know that some kids, they're going to be giving out a lot of money to get them in the door, and they want them, and they're happy to do that. And then some families are going to write a full check because they choose to, and everybody in between, but they've got their targets. And when they're giving out packages, it's very strategically done. So just keep that in mind. We don't know each school's business plan perfectly, but that's part of what we do with families is we understand that. And so that helps you project these net costs. So when you get to this merit aid piece, a big takeaway here, and every year I have parents that get through this whole process and it's second semester, senior year, and they're like, my child got into all these schools. Where's the money? They have a 4.0 unweighted, perfect SAT scores. And I tell them, you know what? It's great that your child got into Stanford, but Stanford doesn't give merit aid to any child. There's no kid that's walking around on any Ivy League campuses, any of the NESCACs, that's like Williams and Bowdoin and Middlebury, all those schools in the Northeast, the MITs of the world. No kids are getting merit aid. That's part of their business plan. They are very good at meeting need, but they don't offer merit aid. They don't offer merit scholarship. So doesn't mean that if you don't qualify for need-based aid, that school should be off the list. I'm just here to educate you on that so that you know that, and your child is applying to that school with your eyes wide open and you're figuring out how you're going to afford that, or how else are we going to cut the cost of college, private scholarships, whatever it happens to be. Okay. But there are many, many, many schools in this country that offer very nice, generous merit aid, but it's just on a school by school basis, and it's on a student by student basis. It's very student dependent. The last thing I want to say about merit aid, and this is really planning, but there's a piece in this process called appealing once your child gets in. This is after they apply, you submit financial aid forms, they get in, they get what's called a financial aid award letter from the college, and your child might get merit aid from several different schools. Well, if they're competing schools, that's an appeal opportunity to say, Great. Thank you so much for this $15,000 Provost Award or whatever it is. But XYZ school gave my child 20, or the students involved in the appeal process too. Can you match it? Or can we get up to 18,000 that will make your school affordable? So when we work with families, we actually help them build lists forward thinking to, I know you don't like this, like for example, BU and Northeastern in Boston. Um, if a student really likes Northeastern, many times if one of our experts is working, they'll say, apply to BU. I know you visited, you don't, it's not your favorite, blah, blah, blah. Doesn't matter, because if you get into both, you could potentially appeal to Northeastern if you got merit from BU or vice versa. So that's a more forward thinking thought. But that's how merit aid works. You can potentially get both, but realize that it's all coming out of that endowment money that I talked about at the beginning. So if you're a family, say that you have 40,000 of need, financial need, but your child gets a $20,000 merit scholarship, even though that wasn't given for need, it's still their money. So now your need has gone down to 20,000. So they don't stack, they don't say, they don't look at them in silos. They don't say, here's your merit. Oh, you still have 40,000 of need. And so some families, some students will get both. Sometimes the merit is more than the need, and then you're done, right? And that's a lovely thing because now it is eating into your SAI at that point. So these are the two buckets. So what I want to do is take a minute. Now, this is just my last slide, but I think I hit all this. Yeah. Office of Admissions gives this out, not financial aid, and I hit all these pieces. So I'm going to share my screen on a different screen here, and I just want to show you, and I see we have some questions, so I might click on that once I go out of here real quick. So let's look at a sample family really quickly. And this is our software, and at the end, I'll give you a link, but I encourage you to set up, that's the biggest takeaway. Set up a free account in this software. You can put in 3 schools and you have access to almost everything with those 3 colleges. But the key thing is it's going to immediately tell you what your SAI estimates are. And you notice there's 2 of them here. There's a federal SAI. That means that's from schools that only require the FAFSA. And then there's an institutional SAI, and those are schools that require the FAFSA, but also a form, and I'm going to talk about both of these in a minute, called the CSS profile. And the big difference, there's several big differences between them that I'll talk about in a minute, but you might be thinking, well, Peg, why is there a range here? I get what an SAI is. Why isn't it just a number? Well, the CSS profile schools, they all calculate their what we call IMSAI or EFC in their own proprietary way. And a big piece that can make things different is your home equity in your primary home that I talked about earlier. Some schools they literally have the audacity to look at all of it as an asset. Now you can appeal that, but as we all know, a bank's never going to let you access all your equity. So that's crazy anyways. But there's schools that do that all the way down to schools that say, hey, we are going to look at the CSS profile, but our philosophy is parents shouldn't be tapping that, so we don't include it. So that's like a Columbia. So let's just take a look here so you can see it kind of drives home the point I was making earlier that sticker price is really irrelevant. So look at Columbia. I actually added Columbia because it's one of the schools that's actually showing, it's crazy to me, and I've been doing this for decades. We're actually into 6 figures as a sticker price, which is, I won't even get on my soapbox about it, but it is what it is. So there's Columbia. But for this family, this is our projected net cost. That's what our software does. It basically tells you, hey, this is the net cost. Dramatically different, right? Which is huge. Northwestern also uses IM, but look at the difference. Nice discount, but not nearly as high as Columbia. And remember, the U, if your child's applying to the U, is about this all in. This family won't get any money from the U. You'll be paying full price, but it's very similar to the cost of Columbia. And this as these prices go up and up, it's not happening as much, but just please keep in mind that these sticker prices are irrelevant. But it's very important to understand your family and your individual planning opportunities. These schools only look at the custodial parent if you're divorced or separated, and I'll talk about that in a few minutes. One other thing to point out, like here's Berkeley, very popular school in our neck of the woods, right? It's expensive. Out of state, it's very expensive. And you might be thinking, well, Peg, on your slide, you said cost of attendance, 78, almost 79,000 minus SAI, because this is the SAI they use. There's a lot of need there. What the heck? Why is it full price? That's because the UCs of an out-of-state family with an SAI of 35,000, they're not going to give you any of their endowment money for need-based aid, even though there's a lot of need. These are the things you need to understand as parents as you're working with Katie and the other counselors at Bear Creek around the academic and personal fit. You really want to mesh it with the financial fit, with the affordability, and have that in your mind. If you're married, both partners should be talking about this. I have families all the time where I'm like, have you talked about how much you can afford to pay? And they look at each other, no, we haven't really gotten there yet. Well, that's an important discussion, because I've had parents in the past where it's like parents paid for Yale, and then the other parents, like, I worked through college. Now you can't do that anymore. It's so expensive, but you see my point. Very different places they're coming from. So having one of the experts on our team I've known for years, he calls it the college money talk. Like, having that talk with your kids is hugely important. It doesn't mean telling them your income and everything. It's just kind of setting those expectations. So this gives you a really good example of why these sticker prices are irrelevant. And I strongly encourage, I'll put the link in the chat at the end, but please set up a free MyCap account. Just put in those 3 schools and start to get to know your SAIs. Once you're in there, you can go in your profile, change the numbers around, say, hey, we need to buy a new car. What if those assets are off the table? That kind of thing. It's a great planning tool, and it just gives you a lot of insight about your family. And then, I mean, you can upgrade if you want as well, but you can get those 3 schools in there. Okay. All right, let me just take a quick second. Let me just, oh, okay, you guys were writing about, okay, that was a while ago, so I think I'm good. Okay, good. All right, so that was just connectivity. So I don't have any questions. All right, let me hop back in here into my slides. All right, so merit-based aid, covered that. Now let's get into the next piece, the fun, sexy part, the financial aid forms, as I kid here. Okay. And if you have a class of 2025 child, you are in this now. Okay. The CSS profile is live right now. So basically, this slide is pretty basic, but there is a form, the FAFSA. You've probably heard of it since you have high school kids, free application for federal student aid. Almost every school in the country requires that. And then there's a second form, the CSS profile. As I said earlier, I would pretty much bet my life at almost everybody in this webinar, you're going to be doing this form. You have at least one school that requires it on your list. So you'll potentially be submitting both of these to some of these schools. Just like everything in this process, deadlines are hugely important if you are eligible for need-based aid. Because if you miss a deadline, that could be tens of thousands of dollars. So make sure your kids with you, however you decide to do it as a family, are on top of that. Because the college might communicate about it, but it's not really their job to say, hey, the deadline's approaching, get it in. That's not really their job. So if you miss it, it could be very punitive. And I've worked with families with upperclassmen where they miss a deadline and it's very punitive. So let's get into the nuts and bolts a little bit of the FAFSA. The FAFSA did a dramatic change last year. So it first, with the new format, was the 24-25 school year. Some of you have older kids, you kind of lived through that. It was brutal. There's still tech glitches that haven't been fixed, which is crazy. But this is what's going on with the FAFSA. Typically, before all the changes last year. It went live October 1, along with the other form, the CSS profile. This year, it's a little different. They've decided, they got a lot of feedback from big entities in the higher ed space saying, if you're not ready to go live, don't go live until you feel like you've got your tech glitches out. So this year, what the Department of Ed has said is we will go live for all families. Their language is by December 1. So it could be before, but they are beta testing it. So it is coming out in 4 different betas. Right now, they're in beta 1, where a very small group of students are invited through community-based organizations, certain high schools, certain colleges that actually apply to the Department of Ed to be part of the beta. They have to apply to be in beta 1, 2, 3, and 4. And as they move through it, different kids submit, they watch for tech glitches, they fix as they're going. The idea is by December 1, hopefully, I wouldn't say seamless because tech never is, but hopefully they've got it smoothed out pretty well so that you won't have to go through some of the crazy stuff that families went through last year. So if you get a reach out that you can be part of a beta, you can choose to do that. Otherwise, you can't as an individual say, hey, I want to be a beta, I want to get that. You can't do that. If you hear from an entity that's saying, hey, you can be part of it, you can be part of it. But one thing you can do right now is get your federal student aid IDs, FSA ID. Okay. You see the link on here. Basically, you want to be on a studentaid.gov site. Okay. Because you're going to put in your social security and your date of birth. Every student needs this. They're going to need it to log in and start their FAFSA. And at least one parent's going to need it. If you're married filing jointly, only one parent needs to get it. If you're divorced, only the custodial parent is going to get the FSA ID. And the definition of a custodial parent has changed. This is part of the changes. It's the parent who provided the most financial support on a year look back from when you literally hit submit. It's not based on a calendar year. So I meet with a lot of families that are like, well, Peg, we're 50-50 in our support. If that's the case, that's a massive planning opportunity. Don't be 50-50, right? Make sure, figure out which parent is more advantageous to be the custodial parent and have that parent cover a little bit more of the expenses of the child. This is something we've worked with a lot of families one-on-one on, and it can mean a lot of need-based aid versus potentially zero need-based aid. Okay. So keep that in mind if you're a divorced or separated family. Lots of planning opportunities there, and probably a good idea to get some extra support around this. So that's how the FAFSA works. And again, it's based on prior year. So go ahead and get that FSA ID. If you've got a senior, just get that out of the way because you're going to submit it. The Social Security Administration, make sure that you are who you are. That can take a few days. Just get it done. Save both of those passwords in a safe place because you're going to need them every year when you're doing the FAFSA. So that's the one thing you can get out of the way for the FAFSA now. And then just stay tuned. You'll be in our ecosystem now since you registered for this webinar. I'm all over this, looking on the federal student aid site every day. What's the latest? What's going on? And we keep our whole community informed on it. We'll do webinars on it when we can, when there's more to share. Okay, second form that I've mentioned several times today, the CSS profile. So this, if your school, a lot of private schools, mostly private schools, UVA, William & Mary, Michigan, and UNC Chapel Hill are the publics that require it. The rest are all private. You're not sending it instead of the FAFSA, you're sending it along with the FAFSA. There's some key differences here. First thing is this form is live. So if you have a senior, go to cssprofile.collegeboard.org. It's administered by College Board. You're going to log in with your child's College Board credentials. So if they've taken the PSAT, SAT, APs, that's all College Board. So almost every child has, it's an email address as the username and a password. You go into the 2526 profile. If you don't have a senior, you can't do this yet. And you log in that way and you get started. Some key differences with the FAFSA. I already mentioned home equity. These schools will add this form will ask about your home, your prime, all of your real estate, but they will ask about your primary home. When did you buy it? What did you buy it? What did you purchase it for? What's the market value? What's your mortgage? There's some planning opportunities there. A lot of times people put too high a market value for their property. On the financial aid forms, which we have webinars about, my 3 commandments are don't overestimate, don't overshare, and be honest. So there's some strategies around submitting those forms to put your best foot forward. If you're a business owner on either form, they're going to ask about your business. On the CSS profile, they're going to go in depth on your business. On the FAFSA, they're going to ask you the value of your business. Some people, they're like, I don't know what the value is. Some people have businesses where literally the value is zero if they were to sell it. So another place where people need support quite often. You might be thinking if you are divorced or separated, well, my ex is like off the grid, or it's not safe for my child to be communicating with them. Just planting the seed, there is something called a non-custodial waiver. And that's where you can go to the colleges and say, hey, we are divorced. I'm the custodial parent. This is why the other biological parent, we're asking for a waiver. So they don't need to submit what's called the non-custodial profile. 2 forms that go to College Board and are privately sent, so you don't see each other's information, but the colleges bring both biological parents together and look at it and the household, okay? The FAFSA, I mean, the CSS profile is much longer than the FAFSA. The new version of the FAFSA, when it's moving the way it's supposed to be, is even shorter. So much more invasive, much more complex, but there are strategies on completing it and also completing it so that you put your best foot forward for appealing, like I talked about earlier down the road. So that's something, we do webinars on. So if you get an invite to our free webinars, it's worth it to sign up and listen. And they're all recorded like this one. So if you can't make the time, you'll get the recording and you can listen at your leisure. Katie and I were talking about this in the green room before we started. She was saying how a lot of kids are applying early, either early decision or early action. This is a huge part of this whole landscape. There's the whole admissions piece, which Katie is your expert on that. That's not me. But, when you apply different ways, there's different financial aid form deadlines. That's a big takeaway. And also, there are ramifications on the financial side. I'm a big advocate. I always tell parents, cast a wide net when you're picking schools. Like I said earlier, competing schools. I'm sure Katie does the same thing purely on the academic and personal fit, right? You want to make sure that you get into a bunch of schools you're excited about from the admissions and personal fit, but also schools that financially make sense. You could play them off each other for appeal. Early decision, I will say, you're committing. You can appeal though. I have successfully appealed for need-based aid early decision several times, very successfully. So it's not like you're stuck with whatever they give you, but if you are going to go ED from a financial standpoint, please, please, please make sure you can afford it, because you can get out of the contract by saying you can't afford it. But in an ideal world, every family knows that ahead of time, and you just don't apply if you don't know. No, have a good idea what the college is going to give you, that net cost that we looked at and we've talked about today, because it's really hard for kids if they get in and then you have to back off. And it's not the best practice, right? The school signs a contract, the student does. So it's really better to have your ducks in a row if you're going ED. EA, it's not binding, right? So you can cast a really wide net. I love EA. Purely from a financial, for many reasons, but you have all that leverage for appealing because you could have a bunch of competing schools, which is great. And it's just you're done earlier, your kids are done by Thanksgiving, that whole piece is done. But I will say you might have schools that have ED and regular decision. So if you're not going ED, it's regular decision, it is what it is, right? So that's not necessarily possible across the board at every school. Okay. And last piece here, I literally, with my partner, we literally do a whole hour on appealing. And I've mentioned appealing a few times. It's way down the road, but I just really like to plant the seed that it is part of this journey before you actually make your final decision. So just keep in mind that most families, right, depending, but most families should probably be appealing. And if you're building a list with like that competing offers in mind, um, it can be really advantageous. That's something we help families with, starting for ED, it would be January, but all the way through last year, we were doing it well into the summer because the timeline was so crazy with the FAFSA really being a mess. Families weren't getting the financial aid offers. So, so that's it. That's it. And let me stop sharing and I want to, it'll be in your follow-up, but I want to answer any questions first off here. Um, but then I also want to pop this link in the chat for all of you. This is where you can go ahead and set up a free MyCap account to just kind of get the ball rolling. Because if I did my job right today, you learned a few things and hopefully not too much that you're overwhelmed, and that you're going to keep the ball rolling, however you do that, because I've been doing this for well over a decade. And, honestly, when I first did presentations, my husband went to one once because it was in Seattle. And after he said it was great, but it was too much. It was too much. Like people, it's too paralyzing for somebody who's new to this. So I've intentionally tried to make it so it's more digestible. So whatever you learn today, don't just take it and put it in a pile over here. Go to our website, collegeapro.com, look at the free resources, join our free, not free, but they're all free, our private Facebook group. Start learning. Just keep the ball rolling, and opening up a free MyCap account is a great first start to doing that. All right, so let me go in here. Let me see in the chat. Could you pop your questions in the Q&A? Oh, thank you, Katie. To get into the CSS profile. Yep, Katie's like being my wingman here. So it'd be better to buy a new car now versus next year if I have a junior. It doesn't really matter. Assets are literally assessed the day you hit submit on the financial aid forms. So I always tell people, if you're planning, if you've been saving money, say to redo your kitchen counters or whatever, go ahead and do that before you're submitting financial aid forms, right? Because why put that money down that you have it to pay for college when it's basically spent in your mind? That's what's nice about assets, is that you have the ability to plan because it's real time. Unlike income, where people usually learn about how income works when that tax year is over, and then what it is, you just have to appeal to colleges if you have big capital gains or something on your tax return. Okay, so let me see what the questions are. Is this session recorded? Yes. Yep, it will be. Yeah, if you weren't here at the beginning, I'll repeat that. We're going to send out an email with the recording so that you can, if you missed part of it, like this person, that's great. You can watch it. Or if you want your spouse, your kids to watch it, you can absolutely do that. Do the prices include room and board? And if so, does aid also apply to that? Yep. The prices that the cost of attendance that's in the software that I showed you, that's tuition and fees, room and board, books, travel, personal expenses. Those are usually the line items that the colleges have in their cost of attendance, and that includes all of it. So when they decide about your need, they're going to take that student aid index or that expected family contribution. They're going to look at their full sticker price, their cost of attendance, subtract your SAI, and that's how they figure out your need. They don't just look at tuition and fees, they look at all of it. And honestly, like if you look at like the U, room and board is more than tuition, because tuition is now can only go up based on the state legislated that. So they can't just way back, way before you guys, I'm older than you, before your kids were probably in elementary school, the U was raising tuition like 15%. They can't do that anymore. The state has legislated it can only go up by a certain parameter. But they can increase room and board. So you notice room and board is getting really pricey. I mean, it's pushing 18, 19,000 in expensive parts of the country. But yeah, in answer to your question, that aid is based on their full sticker price, which sometimes can be advantageous because if you look at maybe a random school in Oregon that your child's looking at, they might have as their line item for travel $3,000. And so, as a family, well, we're not going to spend $3,000. We don't live in Massachusetts. We're not flying our child back and forth. So you could even, when you're doing your planning, which I recommend you do, say, for us, it's going to be gas. That's like 500 a year, right? Kind of thing. So, but yes, in answer to your question, it does go off of that. Does everyone need to submit a FAFSA form? Can it be used against you when it comes to institutional aid? Great question. I recommend that every family submits the FAFSA, and there's a bunch of reasons why. First one is, and I might not have mentioned, I don't think I mentioned this on the merit slide, there are some schools that require the CSS profile and the FAFSA to be submitted to be eligible for merit aid. Remember, that's the non-need-based aid. There's other schools that just require the FAFSA. There is no list that I can send you that I can stand behind and say it's accurate. And the problem is, even if somebody had created a list, a college can always change their policies. So I always tell people, if you don't want to leave money on the table for that, just submit it. Another huge reason is there are schools in this country, some selective colleges, that if you don't apply for financial aid for freshman year, they assume, okay, the Jones family never needs our institutional money for need-based aid. So if something happens with your family, and I used to say this, do you want to roll the dice that life isn't going to change? I used to say this before COVID. And of course, I didn't anticipate COVID, right? But then COVID hit. That's a perfect, really weird example, right? A pandemic. I was thinking more of like a job loss or a disability, or God forbid, somebody passes away. There was a pandemic. People were business owners making nice money, and all of a sudden their business was shut down for a while. And I've had schools where I've tried to go to bat with families to say, look, really, you won't let us submit the forms? This is what happened. And I've had schools just say, no, you didn't submit it for freshman year, so we can't look at you. So be very careful before you decide not to submit these forms to make sure that college doesn't have that policy. And even if they swear to you they don't, one, you have to be talking to somebody who really knows what they're talking about. But two, they could change their policy again, or that person could leave the college and they say, well, that's not really the way we do things. So you've got to be really careful. I know it's tempting to not submit these forms, but also we have a team of experts at College Aid Pro that I personally found people all over the country to work with families that know what they're doing. Some of these people are at universities currently in financial aid. MIT Sloan School of Business, Harvard School of Medicine, and that guy used to be at BC. So they're currently there. And when I talk to them, we kind of get this behind the scenes look. One of our experts at University of Oklahoma said, when somebody's appealing, if they didn't even submit the FAFSA, we think, well, how hard up can they really be? And that could affect a successful appeal. So there's just a lot of pieces. Also, there's a loan called a direct federal student loan. And you might be thinking, I don't want my child to have loans. One of my colleagues tries to get every parent to do it. And even if they pay it off, they've established a credit history for their child. But it's the best loan out there, and your child's automatically eligible. It's the only loan out there that's only under your child's social security number. Every other loan, state, private, Parent Plus loan, that's a federal loan, is your loan. It has nothing to do with your child. You're co-signing. So a lot of parents, even that have money to pay for most of the cost of college, want their kids to have skin in the game. You don't do that FAFSA, your child's not eligible. So there's a lot of reasons there. Can it be used against you when it comes to institutional aid? So I think what you it isn't used against you when it comes to institutional aid. Like if you submit the FAFSA, that's how they give out institutional need-based aid. I think what you might be asking is some people get nervous. Well, if I apply for financial aid, is that going to hurt from an admission standpoint? And there is a question that says, are you going to be applying for financial aid? People always wonder how to answer it. And I always tell them, don't overthink it, just be honest. If you're submitting the FAFSA for other reasons, like the direct federal loans, just say no and submit the FAFSA. If you're really not doing it to get the institutional need-based grants, go ahead and say no and then submit the form. If you do need need-based aid, say yes. Like if you need it and you're pretending you don't, your child gets in, what are you going to do? You got to come up with the money somewhere, right? So I really, Katie and I were chatting about this earlier. As I said, I went through this with my two kids and try and, there's a lot of moments in this process where, I mean, raising teenagers in general, but then in this college process where you need to take a lot of deep breaths, right? And just try not to stress and overthink everything. But and I think, Lisa, an answer, I think what you're trying to get at too, and I'll answer the tail end of this. When I've talked to colleges and universities about if you have a child that is eligible for need-based aid versus a child that's not, and they're building their class, what have said, look, we know we've got some kids that are Pell Grant eligible, meaning that's the federal grant. They're going to get a lot of aid from different sources. They're not going to pay much for the cost of college. We welcome those kids. We want them. They're going to be great additions to the campus. We're also going to have kids that are full pay. Most colleges don't make every admission decision looking at that. But what they do, if they're not completely need blind, and some of my colleagues think that's not real, but that's another conversation. If they have two kids and they're finishing up their class, say the last 10% of acceptances are going out, they might look at two students. And so there's Cindy and Bobby, right? I'm a Brady Bunch. I grew up on the Brady Bunch, right? So Cindy, Pell Grant eligible, lot of need, maybe, has an SAI of 20,000 or zero, and another student that's full pay or almost full pay. The college could look at that if they're not need blind and say, yeah, we're going to let Bobby in versus Cindy because of their financial profile. But that's not every student in the class that they're forming. It's really toward the end is what I've been told by colleges that if they're that kind of school that's need aware is a terminology, that's how they look at it. So it's your process, but I really think if you are eligible for need-based aid, it is what it is. There's many colleges that welcome kids that are eligible for need-based aid, give a lot of merit aid out. Your child will find the place where they should land. And really, and Katie and I were talking about this, it's really what's so important, and it's so awesome that you have such great support at Bear Creek, is finding the school where your child is going to thrive. It doesn't matter if they're 5% of kids are admitted or 45%. In my mind, both of my kids I have a child who went to Indiana University and a child who went to James Madison University. You might not have even heard of JMU. It's in Virginia. I'm from New Jersey, so I knew the school well. They are 30, they are thriving. Both of them are thriving. My daughter went and got a master's in social work. They didn't have to go to Princeton to make that happen. Princeton's great. I'm not saying anything against Princeton, but just please keep that in mind. It's where your child is going to thrive and really show up big and make things happen wherever they go. That's what really matters. And now I'm speaking more as a parent and what I've seen over and over again with some of my clients, but also with my kids, right? So any other questions? Because I don't see, let's see if there's anything else. Thank you. If you don't have much need-based aid on FAFSA, would you be likely to get a merit scholarship? The merit is totally dependent on that school and how they give out merit. So it has nothing to do with the FAFSA. Basically, a lot of kids are awarded merit aid way before it's figured out if they have need-based aid. So like Bill Gates, his kids could get merit aid, right? He has full ability to pay for all of our kids' college forever and ever and ever, right? They're not linked, right? Office of Admissions gives out that merit aid. And then Office of Financial Aid does their assessment around your finances. This year, you could get merit aid from a school, a FAFSA school, and you haven't even been allowed to submit the FAFSA yet because it isn't December 1. So they're not linked. So don't, you could get both depending on your need, but the merit aid will come in purely based on your child and not the finances. And that's Lisa's question that I already answered. Anything else? We got 4 minutes left. How does merit and need-based aid timing work with acceptance letters? Okay, so with the merit aid, it's not the same across all the schools, but your child could apply. And I've seen and happened with my kids, and I've seen it with my clients where they get accepted to a given school, and in the acceptance letter, it says, "Congratulations, we're offering you a spot as the class of da 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 da. And we're happy to give you $100,000 provost scholarship." Like it's in the admission letter. Then other schools will admit your child, but then the merit shows up, a letter about merit or something in their portal 3 to 4 weeks later. So the timing is not always the same. The need-based aid won't happen. If you apply, if you have CSS profile schools, it is live, right? As I said, so you can submit that CSS profile. What the colleges did last year in this same sort of weird FAFSA timeline is they were producing what's called financial aid award letters because they had your CSS profile. They knew all your financials. So they would give you an award letter and say, hey, this is what you're getting. And most of them would estimate federal aid. So if you were eligible for a direct federal student loan, like a subsidized version, they would put it on there, but they would say estimated because they can't officially offer that until they see the FAFSA. That timing comes after you're accepted, all the financial aid forms have been submitted by the deadlines, and then the Office of Financial Aid gets to work. Regular decision, if your kids are applying to schools where they have it's regular decision, so later deadlines for both, then the financial will come much closer to the admission because the admission might come end of March, and then a financial aid award letter hopefully comes very soon after. So you have a month to figure all this out and appeal. That that was pretty crazy last year because families weren't getting those, but hopefully this year it'll be better. So that's how the timing works on that. I thought we had to submit FAFSA in order to receive merit aid. Now, you can get merit aid unless it's a school that wants the FAFSA and or CSS on file to really accept merit aid. If the school isn't like that, they'll offer merit aid. You accept the merit aid. If they don't care about the FAFSA or the CSS, you won't have to have that on file. But some schools do. So that's why I strongly encourage submitting the FAFSA for sure. And in most cases, the CSS. So yeah, you don't have to have that on file to accept at most schools. But as you've heard me say over and over, it really depends on the college. That's why, honestly, I wouldn't exist. My expertise wouldn't exist if all the schools were pretty uniform on how they do this. They're not. And that's where all the planning opportunities come in, and it gets pretty in depth. All right, and Katie put in here, in addition to what Peg is saying, although you may receive offers without aid, students don't have to accept an offer. Yeah, and remember the universal deadline, which got moved last year, is May 1st. That's when you need to put in a deposit check and make a decision, except for early decision. And I would say too, when I've helped families with early decision appeals, I've had them ask to extend the ED deadline. They're not going to extend it to May 1 because those deadlines are usually in January where you have to accept. But I've had success with families saying, "Hey, give us a little bit more time. We're appealing." Most colleges, they're not your enemy. I mean, they're trying to work with you, and there's a right way to reach out and appeal. So, all right. Well, I hope this was super helpful. As I said, look out for the recording that will come probably tomorrow from College Aid Pro, and definitely set up that MyCap account. Can't stress that enough. And keep the ball rolling. Stay engaged. Jump on our free webinars that you get invites to. Even if you have a junior or sophomore, just keep getting educated. Super important. It'll relieve a lot of stress and help make the process a lot easier. Um, if you have additional questions, if they're very basic questions, our email at College A Pro is support@collegeapro.com. But I will tell you that our support desk, if you're asking questions about your family, they're going to tell you to book a meeting with one of our experts. I'm one of them, but as I said, I've built a team of experts. If you need strategy help, if you need help, you want eyes on your financial aid forms before you submit them, it's well worth booking an hour. So they're not going to get in depth and answer specific questions about your family. If you have a basic question, they'll do their best to answer, but otherwise they'll probably, tell you, hey, get your account set up and book a meeting with our experts. We have all different ways that we support families. All right, everybody, I'm a minute over, so have a great rest of the day, and hopefully we will see you on upcoming webinars. All right, thanks, Katie. Talk soon. Bye-bye. Oh, all right. Have a good one.